Welcome back to the deep dive. Today, we're diving into Bitcoin. It always feels like it's at some kind of crossroads, doesn't it?
It really does.
And right now, it seems like a really critical juncture. We've been looking at some, well, incredibly detailed technical analysis from a recent expert update. We want to give you the inside scoop.
Yeah, exactly.
Our mission, really, with this deep dive is to try and cut through all the complexity around Bitcoin's recent price moves.
There's certainly a lot of it.
Yes, definitely. We want to give you a clear understanding of the immediate scenarios playing out, the key price levels you really need to watch,
Crucial levels.
and, the technical thinking behind it all. The goal is to equip you with insights into what could happen next and maybe more importantly, why.
Right. Turning all that potentially overwhelming data into something clear, maybe even actionable.
Exactly. Actionable knowledge.
So, yeah, we'll be exploring both sides, the more, let's say, bearish possibilities and the potentially bullish paths for Bitcoin. And what's really interesting here is the expert perspective we're looking at. It actually highlights that a significant market peak, they call it a major top. Well, it could have already happened.
Wow, okay. A major top already.
Yeah. Now, it's not necessarily what bulls want to hear, not the expected outcome maybe, but it's certainly not unlikely, quite likely even.
Really? Why is that?
Well, mostly because the price got incredibly close to that $130,000 target range.
Ah, the 130K level. I remember that.
Yeah. And it's important to remember that 130K, it's more of a zone, right? Not a single sharp line. It's an area the market seemed to be aiming for.
So, okay, if I'm getting this right, in crypto, sometimes just getting close,
Yeah,
that's enough. Close enough can signal a top.
exactly. Sometimes close enough really is close enough. But, the intriguing part is that the expert still sees the overall upside move as, well, incomplete, despite this risk of a top.
Okay, so incomplete, but close enough to be worrying. We're definitely in a critical moment then.
For sure.
Because this recent pullback in price, it's gone deeper than what that really optimistic white scenario would ideally allow, right?
That's right. It's a bit too deep for comfort if you're super bullish.
Yeah.
It hasn't technically invalidated that path yet, but
But it makes you nervous.
yeah, it does. And it looks, well, eerily similar to a situation we saw back in August last year. So, caution is warranted.
Okay, let's dig into that white scenario then. You said it's the most bullish path.
Yeah, it represents the most direct, bullish way forward. For this to actually play out, we'd need to see an immediate, like right now, decisive turnaround, back up.
A strong push.
A very strong push. Think like a 5-wave move up, breaking that initial resistance. Then, ideally, a healthy, shallow pullback, something that sets up a higher low.
Right, the classic higher low.
Exactly. That kind of 1-2 setup paves the way for a very direct, strong move higher. The problem is...
Ours was the butt.
Yeah. The challenge is we just haven't seen enough convincing price action from this recent low yet to really confirm it. It's still potential, not confirmation.
Okay, so given we're at such a make or break point, are there any technical signals flashing right now? Anything suggesting a bounce might be coming?
Yeah, there are a few things. If you look at the charts, the 4-hour RSI, the Relative Strength Index,
Yeah.
it's currently signaling oversold, which basically means the price dropped fast, maybe too fast, and often you get at least a temporary bounce after that.
Kind of like stretching a rubber band too far.
Sort of, yeah.
Yeah.
We saw a similar reading back on June 22nd, actually, and also the mass CD indicator on that same 4-hour chart.
Okay.
It's just starting to show early signs of maybe crossing bullish. It's early days, but these are hints that momentum might be trying to shift.
Interesting. And how does that tie into the actual price levels?
Well, it lines up pretty well. The price is currently retesting that previous all-time high from May 22nd. That was around $112,000.
Right.
But now it's testing it from above, so that old resistance could be acting as new support.
That's a classic technical concept.
It is. And we also saw a specific price gap on the CME futures charts around 113K. It just got filled or closed by this recent move down.
Okay, lots of confluence around this area then. So if the bulls do manage to get their act together and push higher, what's the key level, the line in the sand they need to cross?
The big one, the critical requirement for any real upside reversal, is a clear break above $116,220.
$116,220. Okay.
Yeah. That level is identified as the first significant Fibonacci resistance area. You know, those fib levels?
Yeah, based on the previous swing.
Exactly. They often act as hurdles or support. And this 116,220 level lines up really nicely with some previous swing highs too, making it a major battleground.
So breaking that would be significant.
Very. Ideally, though, you'd want to see it break even higher, maybe clear the 61.8% retracement level. That would be even stronger confirmation that the bulls are back in control.
But until then,
Until we see that kind of decisive break, you have to assume the downward pressure is still on.
okay, that gives us a good handle on the immediate bullish hope, the white scenario. But, markets love to throw curveballs.
Yeah, don't they just?
So what about other possibilities? What if this bounce we're maybe seeing just fizzles out? Is there a more complex path?
Absolutely. That brings us to what the analysis calls the yellow scenario.
Yeah.
This one's a bit more nuanced and potentially bearish in the short term.
Okay, yellow scenario, more complex.
Right. It suggests we might actually see another move lower, make a new low, before the bulls eventually get a chance to take things higher again.
So down before up.
Potentially, yeah. This scenario typically involves a three-wave corrective structure downwards, an ABC pattern.
Yeah.
But what's particularly interesting here is that the final wave down, the C wave,
Yeah,
it could form what's known as an ending diagonal.
an ending diagonal. Okay, that sounds technical. What does that actually mean for the price action? What would that look like?
Think of it like a trend getting exhausted, running out of steam. An ending diagonal is basically a specific five-wave pattern. Usually looks kind of like a wedge shape on the chart. It signals that the momentum of the current downward trend is fading and a reversal is becoming more likely.
So it's a complex way down, but it might actually signal the end of the down move.
Exactly. But before that happens, in this yellow scenario, the pulse we might be seeing now, well, that would just be the B-wave pullback.
The middle part of the ABC.
Right. And the analysis suggests that this B-wave bounce would likely be a weak structure, maybe a diagonal itself, something you couldn't really trust, like a fake out before that final leg down, the C-wave ending diagonal.
Okay. A bit trappy.
Could be. The expert definitely prefers this ending diagonal idea over some much messier, really complex pattern. They just call it WXYXZ pattern.
Yeah, let's not go there.
Agreed. Very unlikely anyway. The ending diagonal C wave makes more sense within this yellow framework.
Okay. And if this yellow scenario is playing out, pushing the price lower first, where are the key support levels we should be watching? Where might it find a floor?
Good question. We've identified a pretty significant Fibonacci support area, or zone, specifically between about $111,700 and $107,000.
111.7K down to 107K.
Okay, yeah. That zone was specifically added to the analysis as a potential target area for that yellow B wave correction because these B waves, they sometimes like to dip quite deep before the C wave happens.
Makes sense. And where are we relative to that zone now?
Well, encouragingly, for now at least, the price is actually holding the upper edge of that support zone, right around 111.7K, which, remember, also lines up with that previous all-time high around 112K.
Ah, okay. So still holding that key confluence area for now.
Exactly, holding for now.
So, okay, let's try and sum this up for the immediate future. What's the absolute main thing we should be watching for right now? What's the critical question the market needs to answer?
The immediate focus, like right now and over the next few days, is squarely on whether the bulls can actually generate enough force, enough buying pressure to push the price back up into that resistance zone around $116,220.
That key level again.
That key level. And not just into it, but decisively above it. That's the big test. Especially, with typical crypto weekend volatility. Maybe Sunday brings some action.
Always a possibility.
Always. But until and unless that key resistance level is clearly broken and held, you really have to acknowledge that the underlying pressure, the path of least resistance, probably remains to the downside.
Wow, okay. What a detailed walkthrough. We've really peeled back the layers on Bitcoin's current technical picture here.
Big complex stuff.
It is, from the possibility of a major top already being in to this intricate dance between the optimistic white scenario and the more complex, maybe temporarily bearish yellow scenario.
Yeah, and what's truly fascinating, I think, is just seeing this constant interplay between these different technical possibilities unfolding in real time.
It's like watching chess.
It kind of is. And while that major top idea is definitely on the table, especially given how close we got to 130K,
Can't ignore that.
can't ignore it.
Okay.
But the market is still very much searching for clear direction here. And that $116,220 resistance level, it really is the key pivot point for any immediate upside hope.
And even if we bounce.
Right. And even if we get a decent bounce from where we are now, we have to keep in mind it could just be that temporary wave 4 or B wave within the larger yellow scenario, potentially setting up another move lower eventually.
So many layers. This really raises a big question, doesn't it? For you, listening right now, in this world where we're drowning in information, how does this kind of super detailed, sometimes even conflicting technical analysis actually help us? Does it just help predict, or does it help us truly understand the dynamics underneath?
That's a great point. How does watching these specific support levels, these resistance lines, play out day by day?
Hmm?
How does that reveal that intricate dance between, say, market psychology, fear and greed, and these almost mathematical patterns?
Yeah, it's more than just lines on a chart. So as you watch the market move, maybe think about these nuanced layers. This deep dive hopefully gives you more than just price targets. It gives you a framework for thinking critically about how these complex interconnected systems actually work.